Good morning, students. Today we are going to discuss about some similarities income and expenditure account and profit and loss account. In the previous class, we discussed about what is meant by trading organization and what is meant by non-trading organization. What are the accounts to be prepared in non-trading organization and trading organization? Okay, in non-trading organization, we prepare three types of accounts: trading account, profit and loss account, balance sheet. Okay, like that. So see here, recap. In the previous classes, you learned that meaning of feature and pro forma of income and expenditure account. Income and expenditure account is similar to profit and loss account. Trading account. This account is prepared for the current year. Why the profit and loss account is prepared on trading concerns, how it is prepared, distinguish between profit and loss account and income and expenditure account. So see here some similarities. Income and expenditure is prepared by non-trading concerns. It is prepared by non-trading concerns. Income and expenditure. Under income and expenditure, we enter only the particular accounting period items. Okay. Whereas profit and loss account is prepared by trading organizations, trading concerns. Income and expenditure is prepared by non-trading concerns which do not make any profit or loss. As a non-trading organization, we have to prepare income and expenditure, but we do not use any type of word like profit and loss. We use surplus in case of profit. We use deficit in case of loss. Okay. Coming to profit and loss account, it is prepared by trading organization or trading concerns to know the profit or loss. Income and expenditure account is prepared by the members to know the excess of income or expenditure or excess of uh, expenditure. Okay. Excess of income over expenditure means income is greater than more. Expenditure means it's surplus. Whereas expenditure is over income means it deficit means loss. Indirectly in trading organization we use the word loss. Who prepares the income and expenditure account? The member of that non-trading organization will prepare the income and expenditure account. Profit and loss account is prepared by trading concerns to know the actual profit or loss. Income and expenditure account is prepared to know the financial position of the closing date. We know the financial position of the particular year or closing date. Profit and loss account is uh, prepared to know the profit or loss at the closing date. Income and expenditure account is prepared from the receipt side payment side. We prepare income and expenditure with the reference of from the receipt side payments account. Profit and loss account is prepared from the indirect expenses and incomes. Income and expenditure account includes only current year expenditure and income. Profit and loss account includes all indirect expenses and current incomes of current year. Only current year should be taken. Income and expenditure account includes provision for accrued income earned but not received. Profit and loss account also makes provision for accrued income. Income and expenditure includes provision for outstanding expenses, expense incurred and not paid. Profit and loss account also makes provision for outstanding expenses incurred, not paid. Income and expenditure account has no opening and closing balances. Opening and closing balances comes in receipts and payments account. The receipts and payments should start with opening a cash balance or bank balance. Okay. Profit and loss account also has no opening and closing balances. Okay. In income and expenditure account, all income appears on credit side and all expenses on debit side. Already we know in income and expenditure the first column is expenditure column, second column is amount column, it belongs to expenditure. Third one is income column, and next one amount belongs to income. So whatever the expenses made by the non-trading organization, that should be recorded on the debit side. Whatever the incomes belongs to non-trading organization is posted in credit side. Profit and loss account, all expenses on debit and incomes on credit side. In income and expenditure, excess of credit is known as excess of income over expenditure. It means it is in surplus. In profit and loss account, excess of credit is called profit. Excess of credit is called profit. In income and expenditure account, excess of debit is known as excess of expenditure over income. In profit and loss account, excess of debit is called loss. Income and expenditure account must be accompanied by balance sheet. Profit and loss also accompanied by balance sheet. After preparing income and expenditure, we have to prepare balance sheet. After preparing profit and loss account, we have to prepare balance sheet. Income and expenditure account, excess of income or expense transfer to capital fund. Profit and loss account, excess of credit or debit transfer to balance sheet. See here, income and expenditure is similar to profit and loss account. Yes. Why similar means both accounts are follows the same account rule. Which account? Nominal account. What is the rule of nominal account? Debit all losses and expenses and credit all incomes and gains. Profit and loss account is prepared in trading concerns, whereas income and expenditure is prepared in non-trading. Okay. Profit and loss account shows profit or loss, whereas income and expenditure shows surplus or deficit. Income and expenditure account is prepared by non-trading concerns. Income and expenditure is account to know the excess of income or expenditure during the current year. Correct. Excess of credit in income expenditure account. Profit. Excess of income over expenditure. C. Income and expenditure account must be accompanied by balance sheet. Excess of debit in profit and loss account is loss. Income and expenditure account is prepared from receipts and payments account through. Okay. So see here once again I am repeating. In the previous class, we discussed about what is meant by income and expenditure and what was the pro forma of income and expenditure. And we know that income and expenditure follows the nominal account rule. In the same, it is prepared in non-trading organization. In trading organization, they prepare profit and loss account. It is similar to income and expenditure account. Okay. Next. The same in trading organizations also they prepare profit and loss account. In case of trading, they use the word profit. In case of non-trading, they use the word surplus or deficit. Okay. Income and expenditure account is prepared by the members to know the excess of income or excess of or expenditure during the year. Profit and loss account is prepared by trading concerns to know the actual profit or loss during the year. Income and expenditure account is prepared to know the financial position at the closing date. Profit and loss account is prepared to know the profit or loss at the closing date. Income and expenditure account is prepared from the receipt side. Payments account, it is prepared by indirect expense and incomes. Income and expenditure account includes only current year expenditure and income. Profit and loss account includes all indirect expenses and incomes of current year. Income and expenditure includes provision for accrued income earned but not received. Profit and loss account also makes provision of accrued income. Income and expenditure account includes provision for outstanding expenses, is expenses incurred and not paid. Profit and loss account also makes provision for outstanding expenses incurred and not paid. Income and expenditure account has no opening and closing balances. Profit and loss account also has no opening and closing cash balances. We use the opening and closing balances only in case of receipts and payments. In income and expenditure account, all expenses should be recorded on debit side and all incomes relating to organization for the particular year should be recorded in the credit side of the income and expenditure account. Okay. The profit and loss account, all expense on debit side and incomes on credit side. In income and expenditure account, excess of credit is known as excess of income over expenditure. In profit and loss account, excess of credit is profit. We use the word profit in trading organization. We use the word instead of profit, we use the word surplus in case of non-trading. Okay, where expenditure over income means it is a loss used in profit and loss account, a deficit word used in non-trading. Income and expenditure account must be accompanied by balance sheet. Profit and loss account also accompanied by balance sheet. Means in both trading and non-trading, the third one is compulsory, that is balance sheet should be prepared by non-trading organization as well as trading organization. Income and expenditure account, excess of income or expenditure transfer to capital fund account, whereas profit and loss account, excess of credit or debit transfer to balance sheet. The summary, the income and expenditure account is similar to profit and loss account. Profit and loss account is prepared by trading concerns, income and expenditure prepared by non-trading concerns. Profit and loss account shows profit or loss, income and expenditure reveal the financial position of the non-trading concerns. Thank you.